What's up traders, my name is Layla and welcome back to this week's no-nonsense market recap from Bullish Bear. Wall Street isn't just stumbling anymore, it's full-blown face planting. The markets are sliding faster than a rookie trader's confidence during their first crash. Despite Bank of America and Citigroup dropping some solid earning reports this week, investors are clutching their pearls and their portfolios tighter than ever. Why? The two words that keep Wall Street up at night: inflation and trade wars. Bloomberg reports that China has told airlines to reject all Boeing deliveries and US aircraft gear. That's not just a slap in the face, that's a full economic roundhouse kick. Nvidia got sucker punched on Tuesday when news broke that the US government is now requiring licenses on exports of their H2O artificial intelligence chips to China. The $5.5 billion hit sent shares plummeting in after-hours trading, creating a sell-off cascade that spread through sectors faster than a margin call on leverage day. On Wednesday, Fed Chair Jerome Powell cranked the doom dial to 11, warning Trump's tariffs are unlike anything seen in modern history and has officially launched the Federal Reserve into uncharted waters. Translation is even the money wizards don't know what happens next. Every major index closed redder than a bull seeing eye, continuing the carnage in millions of Americans' retirement accounts. These poor 401ks have been taking a beating since mid-February when Trump's China tariffs kicked in full force. While investors have been begging for rate cuts, Powell said the Fed is standing pat until they can figure out what Trump's policies are actually going to do to the economy. Smart move or economic chicken? I guess only time will tell. Remember that cozy soft landing everyone was banking on? Well, Bank of America's latest fund manager survey shows 37% of respondents still believe in that fairy tale, down 64% from just a month ago. The dream of inflation reaching the Fed's 2% target without dipping into a recession is collapsing faster than a house of cards on stilts. Thursday finally threw us a bone. The S&P 500 and the Russell 2000 small cap index managed to squeak out some small gains, with most sectors of the S&P 500 actually closing higher. Healthcare and tech were the party poopers as United Healthcare Group posted their Q1 earnings, which were about as impressive as a participation trophy. Diversification is finally paying off this year. After US large cap hogged all the spotlight for 2 years straight, international equities are finally getting their moment. Stocks from Europe and Japan are up over 6% through Wednesday, while the S&P 500 has tumbled roughly 10%. That sound you hear? That's your international fund manager saying I told you so. The job market continues to be the economy's MVP. Jobless claims came in lower than expected last week, staying well below the 30-year median of 324,000. March saw non-farm payrolls jumping to 228,000, with 2025 averaging 152,000 new jobs alone. In this economy, that's like finding a unicorn in your backyard. Gold bugs are partying like it's 1849. The yellow metal smashed another record this week, soaring past $3,300 as investors scramble for safety from the tariff tornado. It's crystal clear that the markets are not out of the woods yet. As tariff talk continues to dominate headlines, volatility will likely remain an unwelcome house guest. So keep your investing helmets on because this ride is far from over and the seatbelt sign is most definitely still on. For more updates, tune in next week as we continue to track the market's every move and subscribe down below for more market recap videos. Until next time, manage your risk, stay disciplined, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.